Welcome to the deep dive. Today, we're going to be taking a deep dive into SBI Life Insurance's Q3 FY25 earnings call.
Okay.
Now, I know what you're thinking. Insurance earnings calls. How exciting can that be?
Right.
But stick with us because this one's got some really juicy bits about how India's insurance market is changing,
Yeah.
what customers are looking for, and how SBI Life is adapting to stay ahead of the curve.
It's like getting a glimpse into the future of insurance in India.
Okay, so first, a quick intro for anyone who needs it. SBI Life is a big deal in India's insurance world.
Big deal.
They hold a huge chunk of the market share, and this earnings call basically gives us a peek behind the curtain to see how they're doing and what they're planning.
And what's really interesting is they were doing exceptionally well.
Oh, yeah?
Even with the current economic challenges and the fact that they were up against a really strong performance last year.
So they're not just keeping up, they're actually exceeding expectations.
Exactly.
What makes this even more impressive is that they're achieving growth across multiple areas.
Yeah.
For example, they reported one of their highest ever premium collections in December.
Wow.
That's pretty remarkable, wouldn't you say?
Absolutely. It demonstrates a remarkable level of resilience and adaptability
Yeah.
in a market that's constantly shifting.
Let's get into some specifics for our listeners.
Okay.
Their new business premium reached $262.5 billion, which means they're maintaining their position as the leader in the private market with a 22.4% share.
And to add to that, their individual new business premium hit $198.50 billion, which is a 12% increase compared to last year,
Nice.
giving them a very impressive 27.8% share of the private market.
Wow.
They're really solidifying their dominance.
It's like they're not just playing the game, they're changing the rules.
That's a great way to put it.
Right.
Their profit after tax also saw a healthy jump
Okay.
of 48%, reaching $16 billion.
Wow.
And another key figure is their embedded value,
Okay.
which essentially represents the present value of future profits from their existing policies.
Gotcha.
This jumped to $68.14 billion, a significant 17.7% growth.
Okay.
There was a slight typo in the initial report that mentioned $68.4 billion, but even with the correction, the growth is still substantial.
So it's clear they're financially sound and poised for continued growth.
Absolutely.
But beyond the numbers, what I found particularly fascinating is the shift in consumer behavior they highlighted.
Yes, there is a definite trend emerging.
Oh, yeah. It
seems Indian consumers are moving away from return of premium policies and gravitating towards pure protection plans.
Interesting.
The current split is 63% in favor of protection.
Wow.
Which suggests a growing awareness of the need for financial security in uncertain times.
Yeah, it seems like people are realizing that having a safety net is more crucial than getting some money back later.
Right.
It's a change in mindset, wouldn't you say?
It definitely reflects a shift in priorities, and SBI Life seems to be responding to this shift in a very strategic way.
Exactly. One of the things they emphasized was their focus on diversifying their distribution network.
Yes.
They're investing heavily in their agency channel, which means they're putting a lot of effort into recruiting and training agents across the country.
And this is a key strategy for reaching a wider audience, especially in areas where digital penetration might be lower.
Right, because while the world is going digital, having that face-to-face interaction can build trust.
Right.
And make people feel more comfortable about something as important as insurance.
It's all about striking a balance between digital convenience and human connection.
Now, speaking of digital SBI, Life isn't ignoring that aspect either.
Right.
They're embracing technology in a big way to make things easier for customers and streamline their processes.
Absolutely. And their 3-click protection product available on the SBI Wyono app is a perfect example.
Great.
It's a testament to their commitment to making insurance accessible and hassle-free.
Yeah.
The fact that they've already issued over 70,000 policies through this channel in just 4 months speaks volumes.
That's amazing. Imagine how many people they've reached with this simple digital solution.
Yeah, it's pretty impressive.
But even with all this innovation and progress, SBI Life is also keeping a close eye on potential challenges.
Yes, there's been some talk about potential regulatory changes in the bank assurance channel.
Oh.
Now, for those unfamiliar with the term, bank assurance refers to selling insurance products through banks.
Gotcha.
It's a major distribution channel for SBI Life and many other insurers.
So any changes in regulations could have a significant impact on their business.
Exactly.
But SBI Life seems to be taking a proactive approach.
Right.
They're not just sitting back and waiting to see what happens.
Yeah.
They're actively bolstering their agency channel as a potential buffer if bancassurance faces any restrictions.
So they're not putting all their eggs in one basket.
Exactly.
They're spreading their risk and building multiple avenues to reach their customers.
It's a smart move considering the uncertainties in the regulatory landscape.
Absolutely.
And speaking of new avenues, SBI Life also introduced a brand new product during the quarter, Smart Platina Supreme.
This is a non-participating savings product that's designed to provide a guaranteed income stream.
Okay.
It aligns perfectly with the growing desire for financial security that we were discussing earlier.
And it seems to be resonating with consumers.
It is.
Within just 20 days of its launch in December, they racked up a remarkable euro 2.5 billion in premiums.
Wow, that's incredible.
That's incredible.
It shows they have a keen understanding of their target market.
Yeah.
And are delivering products that people actually want.
So before we move on, let's take a step back and summarize what we've learned so far.
Okay.
We've seen that SBI Life is not just surviving in a challenging market.
Right.
They're thriving.
Yeah.
They're adapting to changing consumer preferences, embracing digital innovation, strategically diversifying their distribution network,
Absolutely.
and they're not shying away from tackling potential regulatory hurdles.
It's a picture of a company that's not just reacting to the market, but actively shaping its future.
And in the next part of our deep dive, we'll dig deeper into the nuances of their performance,
Okay.
explore their future outlook, and discuss what this all means for you, our listener.
We'll unpack their agency channel strategy, delve into the potential impact of bancassurance regulations,
Yeah.
and examine their commitment to operational efficiency.
So stay tuned. We've got a lot more to uncover in this fascinating world of insurance.
It's more exciting than you might think.
It really is. Welcome back to our deep dive into SBI Life Insurance's Q3 FY25 earnings call.
It's good to be back.
Before we dig into the next layer of insights, let's quickly recap what we've uncovered so far.
Okay.
SBI Life is exceeding expectations with record-breaking performance.
Yeah.
They're expertly navigating a shifting market landscape, and they're even anticipating potential challenges like the possible bancassurance regulation changes.
Right.
All in all, it's a fascinating case study of a company that's really in tune with the pulse of the market.
Absolutely. They're not just keeping up. They're setting the pace.
Right, and one of the areas where this is most evident is their strategic focus on the agency channel. Now, in an age where everything is moving online, you might wonder why they're putting so much emphasis on this traditional approach.
Yeah, it seems counterintuitive.
But as we discussed earlier, it's all about creating a balanced approach that combines digital convenience with the power of human connection.
Exactly. And it seems to be paying off.
Yeah.
They've made impressive strides in expanding their agency force with over 75,000 new agents added in the last quarter alone.
Wow, that's a huge increase.
It is.
It shows they're serious about building a strong and dynamic team on the ground.
And it's not just about numbers. They're also focused on empowering their agents with the right training and support to ensure they can effectively serve customers.
And they're backing this up with strategic investments in their physical presence.
Yeah.
They've opened 46 new branches this fiscal year, with plans to add another 40 by the end of the year.
Wow.
So they're literally expanding their footprint across the country.
This is a key move, especially when you consider that a significant portion of India's population still prefers face-to-face interactions, particularly when it comes to financial matters like insurance.
It makes you realize that while digital is important, it's not the only answer.
Right.
Sometimes having a real person you can talk to, someone who understands your specific needs and concerns, can make all the difference.
It's about building trust and fostering relationships which are essential in the insurance industry.
And the results speak for themselves.
They do.
The agency channel's share of individual rated premium has increased from 26% in the previous period to 30% in the current period.
Okay.
That's a pretty clear indication that their strategy is working.
It's fascinating to see how they're blending traditional methods with modern approaches to create a more comprehensive and effective distribution network.
It's like they're taking the best of both worlds and using it to their advantage.
Right.
Now, while we're on the topic of distribution channels, let's circle back to the elephant in the room, the bancassurance channel.
Right. As we discussed earlier, there's some uncertainty surrounding potential regulatory changes in this area.
For our listeners who might not be familiar with the term, bancassurance basically refers to selling insurance products through banks.
Right. It's a significant revenue stream for many insurers, including SBI Life.
And any regulatory changes could disrupt this channel and potentially impact their business.
Exactly.
But SBI Life seems to be taking a proactive approach. They're not just sitting back and waiting to see what happens.
Yeah, they're actively strengthening their agency channel as a way to mitigate any potential negative impact from bancassurance regulations.
It's a smart strategy to diversify their distribution network and not be overly reliant on any single channel.
It's like having a backup plan in case things go south. It shows foresight and a willingness to adapt, which are crucial qualities in today's dynamic business environment.
Absolutely. Now let's shift gears and talk about SBI Life's performance in the context of the overall market.
Okay.
They achieved a remarkable 10% growth in individual new business premium in Q3 FY25, outpacing the industry average of 6%.
That's impressive.
That's pretty impressive,
Yeah.
especially considering the economic headwinds we've been talking about.
Right.
It shows they're not just keeping up with the market, they're actually outperforming it.
Their strong brand reputation, diverse product portfolio, and robust distribution network are all contributing factors to this success.
And we've already talked about their successful launch of Smart Platina Supreme, which is clearly resonating with consumers.
Right.
But it's worth noting that they're also seeing strong growth in their ULIP offerings.
You're right. ULIPs, or unit-linked insurance plans, accounted for 64% of their individual new business in Q3.
Wow.
This aligns with a broader industry trend where people are increasingly looking for products that offer both investment opportunities and insurance coverage.
It's like getting the best of both worlds.
Exactly. And despite recent market fluctuations, SBI Life remains confident in the long-term appeal of ULIPs.
Okay.
They're emphasizing the potential for attractive returns over a 5 to 7 year horizon, encouraging investors to adopt a long-term perspective.
It's a good reminder that investing for the long term often yields the best results.
Absolutely. Now, while they're painting a positive picture of growth and expansion, they're also acknowledging the potential challenges ahead.
Like what?
One challenge they're anticipating is maintaining their impressive profit margins as their product mix evolves and the market dynamics continue to shift.
That makes sense.
Their current VNB margin, which stands for value of new business and essentially represents the profitability of their new policies, is a healthy 26.9%.
Okay.
But they're anticipating a potential dip as they prioritize growth in the coming years.
So they're saying it might go down a little bit?
They've indicated a target range of 27% to 29% for their VNB margin in the long term.
Okay.
So while there might be some fluctuations in the near term, their long-term outlook remains positive.
So it's like they're willing to take a slight hit on profitability in the short term to fuel long-term growth.
Exactly. It's a strategic decision that reflects their confidence in their ability to capture a larger share of the market.
It's a bold move, but it seems like they've calculated the risks and believe the potential rewards outweigh the challenges.
Now, before we move on, let's touch upon another key aspect of their performance, their commitment to operational efficiency.
Yes, they've made significant strides in streamlining their processes and leveraging technology to enhance efficiency and improve the customer experience.
For instance, 99% of their individual proposals are now submitted digitally and 50% are processed through automated underwriting.
Wow.
This not only reduces processing times, but also minimizes errors and makes things much easier for customers.
It's like they're taking the hassle out of insurance.
And they're achieving all of this while maintaining a strong focus on customer satisfaction, as evidenced by their impressive 99.3% death claim settlement ratio and their incredibly low mis-selling ratio of just 0.03%.
Wow, those are some really impressive figures.
They are.
Shows they're not just focused on growth and profits, they're also committed to ethical practices and putting their customers first.
It's a testament to their values and their dedication to building a sustainable and customer-centric business.
It's like they're proving that you can be successful and ethical at the same time. And they're setting a great example for the rest of the industry.
Now, before we wrap up this part of our deep dive, I want to pose a question to you, our listener.
Okay.
Think about everything we've discussed so far. What stands out to you the most? Is it their impressive growth, their innovative strategies, their commitment to customer satisfaction, or perhaps something else entirely?
It's a good question to reflect on because it helps us understand what's truly important in the ever-evolving landscape of the insurance industry.
And in the final part of our deep dive, we'll explore SBI Life's outlook for the future, discuss potential investment implications, and leave you with some food for thought as you navigate your own financial journey.
So stay tuned for the grand finale of our SBI Life deep dive. And we're back for the final part of our deep dive into SBI Life Insurance's Q3 FY25 earnings call. We've covered a lot of ground from their record-breaking performance to their savvy strategies for navigating a changing market and even anticipating potential challenges. But what does it all mean for you? That's what we're going to explore now.
That's right. Let's connect the dots and see how these insights can be relevant to your own financial decisions.
First, let's talk about SBI Life's vision for the future. They're projecting a growth of 15 to 17% in individual annualized premium equivalent, or APE for short in the medium term. APE is basically a measure of new business premium. So this target reflects their confidence in continued growth of the Indian insurance market and their ability to snag a big chunk of that growth.
It's an ambitious target, but considering their track record and the trends we've been discussing, it's not out of reach.
Exactly. And what's driving this optimism? Well, SBI Life is banking on a few key factors. First, there's a growing awareness of the importance of financial security, especially in these uncertain times. Second, disposable incomes are on the rise, which means people have more money to spend on things like insurance. And third, India has a burgeoning middle class with increasing needs for protection and financial planning.
These are powerful forces that are likely to shake the insurance industry in the coming years.
And SBI Life seems well positioned to capitalize on these trends. They've got a strong brand, a diverse product portfolio to cater to different needs, a robust distribution network that reaches both urban and rural areas, and a commitment to customer satisfaction that sets them apart.
They're also investing heavily in technology, which is crucial for staying competitive in a rapidly digitizing world.
So from an investment perspective, SBI Life looks like a company with solid fundamentals and promising growth prospects.
Of course, as with any investment, there are always risks to consider. Factors like regulatory changes, economic downturns, and increased competition could impact their performance.
That's why it's essential to do your own research. Understand your risk tolerance, and maybe even chat with a financial advisor before making any investment decisions.
Now, beyond the investment angle, this deep dive offers valuable insights into the broader trends shaping India's insurance landscape.
We've seen a clear shift towards pure protection products, indicating a growing awareness of the need for financial security.
This reflects a changing mindset where people are prioritizing protection over potential returns, highlighting the evolving needs and priorities of Indian consumers as they navigate an increasingly complex world.
We've also witnessed the growing influence of technology in the insurance industry, from streamlined processes to innovative product offerings like that 3-click protection plan we discussed earlier.
This digital transformation is making insurance more accessible, affordable, and convenient for consumers, opening doors for wider adoption and financial inclusion.
So what does this all mean for you? It underscores the importance of financial planning and having adequate insurance coverage to protect yourself and your loved ones.
It also highlights the need to stay informed about the evolving trends and options in the insurance market to make well-informed decisions that align with your individual needs and goals.
Whether you're considering a new insurance policy, evaluating your investment portfolio, or simply trying to make sense of the changing financial landscape, we hope this deep dive has equipped you with some valuable knowledge and a fresh perspective.
Remember, knowledge is power, especially when it comes to your financial well-being.
And on that note, we wrap up our deep dive into SBI Life Insurance's Q3 FY25 earnings call. We hope you found it insightful, maybe even a little surprising, and that you've walked away with a better understanding of this dynamic and evolving industry.
Thanks for joining us on this journey, and until next time, stay curious and keep exploring.